Welcome back to Squawk Box this morning. Activist investor Dan Loeb is asking Disney CEO Bob Chapek to end the company's annual dividend and to try to divert more of that capital to new content for the Disney Plus streaming service. Loeb's Third Point Capital built a large stake in Disney based on its streaming prospects. It's unusual, though, of course, for an activist to call for the suspension of a dividend in favor of capital expenditures. Most people don't want to spend more money. They want to get the money back to shareholders. But Loeb is arguing that Disney can trade similarly to Netflix if it can demonstrate best-in-class status in streaming and rise above the rest of the pack. So an interesting move for Dan Loeb, and an interesting move. We'll see whether Disney decides to accept that recommendation. Becky?
I mean, there's probably a part of management at Disney that would love to accept that and run with it. But I would guess, Andrew, that they're also concerned about alienating the long-term shareholders who have been there for the dividends. Disney has a very wide shareholder base. And Dan's probably right. If they could get rid of some of the dividend that they're paying out and just focus it on future earnings, that could be a huge way to kind of juice the growth for the company. But again, you're talking about a loved, widely held stock and what that means for the people who have bought into it for such a long period of time. That's a gamble, and I'm sure they know their investor base better than we do.
There's also potentially a question about the timing of this, which is to say, given the ongoing pandemic and how difficult it is to create content in this environment. And this is something that Disney's being impacted by, but all of the studios are being impacted by. You could make the argument, you know what, keep the dividend for now, but potentially, you know, coming into the first, second, third quarter of 2021, when you do want to ramp up production in a major way when you can, there's going to be a sort of stampede to create content. Maybe you would think about it then. It'll be interesting to see what happens over the next couple of months, but part of it's going to be about the health of Disney and, frankly, the health of the parks and everything else. So we'll see.
Yeah, they're going to have an interesting time figuring out how they split the baby on this one.
God, if Disney
has
trouble,
Facebook announcing.
If Disney has trouble with content, you know what I mean? I mean, that's what, and original content is king. But if you think of Disney as being in a pretty good place to compete with Netflix. In terms of, I mean, everything that Iger bought over the years.
Lots of characters
Pixar,
that they can
Star Wars, but they have to create it, I guess.
I don't know if you've run into this. I mean, we feel as a family, we're definitely running out of new stuff. Most of the stuff we're now watching is stuff that we missed, you know, months or if not years ago. We're going back to watch old stuff in large part because there isn't a plethora of new stuff that's coming. And I think come the end of this year, early into 2021, you're going to go onto a Netflix, you're going to go onto a Disney, you're going to go onto a Hulu, and I bet you're going to see a little bit of churn because some people are going to say, you know what, I'm going to hold off. There's just not enough new stuff for me.
Shepard Smith here. Thanks for watching CNBC on YouTube.